Aloha and welcome to Java. Thank you all for joining me. It's Friday, May 24th, 2024. So we've got no market open on Monday in the United States. It is Memorial Day coming up. We've got a lot of stuff we're looking forward to for this weekend. Greg is out today, so hopefully I can cover enough for the markets for him as well. I'll probably go into a little bit more than I normally do, just to make sure we cover everything. So let's go right into it. We've got to start with always the MMRI, our favorite risk indicator. So we've got rising risk. We're above 290 now, 291.3. So we'll go into what the market did a little bit, but in the fear greed gauge, we're in full neutral territory. Did have a pullback yesterday. So with a lot of this going on, the first thing we look at always is the 10-year yield and the relative strength of the dollar. Both of those rose yesterday. So when those rise, they tend to put pressure on everything else because everything else price goes down basically as it's denominated in dollars. So we have another interesting thing with cryptocurrencies. We have Bitcoin drop a bit as Ethereum actually rose, but this was because they came out with approving the Ethereum ETF. So there's going to be some of that flowing into that. Going to watch today. It is Friday, right before a long weekend. As I said, this is critical to keep this in mind. So we've got options expiry toward the end of the day. So middle of the day, volume goes down, not too much happens, but toward the end of the day, on an option expiration, can really create that volume and rapid moves to either direction. So we've got Bitcoin and Ether options also expiring today. They're over $2.7 billion. So with the recent Ethereum ETF, that if you're in those trades, you may want to watch everything that is also related to those like Coinbase, Mara, Riot, the miners. So yesterday we had the Dow plummet over 600 points. So this marked worst day of the year. It's probably one of the best pullbacks we've seen in some time. So with this correction, due to the rising risk, and as we said, the increase in strength of the dollar and the 10-year yield, we may be green on the open, but as I said, the end of the day, watch caution on that volume, particularly the final hour and a half of trading. We've got the long weekend to look at. Intensified geopolitical risk, I'll go into that as well, and closed Monday. So typically a lot of things happen on weekends where they're longer. We'll go into that as well. So we also had Goldman Sachs, their estimation, they pushed it out to the first Fed rate cut, which is what the market is looking for, out to September from July. So markets corrected on that news. So at the moment, pre-market, showing a bit of red, but the futures are going green. So we'll see what the market gives us and trade that and go from there. So in our calendars and earnings, not a lot of huge stuff, but they've been having a lot of Fed speakers come out. And every time they do, what they're saying manages the market. So I used to have a lot of people actually, I still do, say, why in the world are you talking about Fed speakers? Because they have nothing to do with the market. My opinion, they have everything to do with the market. If you don't pay attention to what's coming, you're going to get hit behind by that train. So we have a couple of savings coming out, stories coming out. American savings and retirement rates hit a record, but many still don't feel on track. Well, there's more to this story. So they're talking about, this is a report from Fidelity. They estimate and recommend a rate of 15% for worker and employment contributions if you're in those plans. So the total rose to 14.2%. However, that was in less than a third of workers in the United States, and even less than that are participating in the 401k. So their main concerns, of course, future healthcare costs and inflation. So taking a slight look at inflation with the prices lately, we see the prices from March to April. Now, even though these look like small increases, the point is that they're still increasing. They're not decreasing. So as we're watching inflation, quote unquote, return, it really isn't. So on the flip side of this, we are going to watch deflation. If that happens too rapidly, could also cause concern. We'll talk about that a little more too. So going into some of what is going on here. So I'm going to start with companies and jobs. We've got private credit has too much cash and not enough places to put it. What do they mean by this? Basically, private credit not loaning so much anymore, but also a lot of companies as well moving into cash because of the uncertainty of what's going on. Even though inflation is threatening to take down the amount of money they're getting every time period, they're losing whatever the inflation rate is, 3.44%, whatever it is they're saying it is. However, that outweighs the risk of putting the money other places. So that's why they're purchasing gold. Gold is going up. Commodities are going up. So we'll keep an eye on where that capital is going. A lot of companies, if they're going to make it through this, they know they have to bolster their capital reserves as well. Got a lot of companies going out. And then the other side of that is cutting their costs. So we've got electric vehicle maker Lucid. They're going to cut their workforce by 6%, which is equivalent to about 400 jobs. But this is showing that they're, again, cutting their costs. There's multiple companies doing this. So I just had to throw this in here. We got bad news for coffee addicts. Cheaper beans are getting pricier. We know coffee is another commodity getting more expensive. And I suppose a part of this is to say that the first step in stopping being an addict is to admitting if you are one. So maybe I should start JavaNonymous. We'll see. So I've got these shipping containers here because I want to talk about inflation and why it's going to continue. We've got shipping costs basically on the rise. We've got them basically predicting a terrible hurricane season as well as global seas. So they're calling it the perfect storm in the sea of global trade because bad weather means longer ocean transits, costs go up, and that is inflationary. So freight rates are already up 30% over just the past few weeks. We've got cargo owners and shipping lines expecting more disruptions to continue throughout the rest of this year. So that will affect all goods that are crossing basically that ocean. So going into banks, they're still weak, still have issues. We've got independent financial. Okay, South State Corporation is planning to purchase them. Now, Independent used to purchase other banks, a lot of other smaller banks, they had merged. Now South State is purchasing them in a $2 billion deal. So this is just more of what we're going to see continuing because of the interest rate environment. And then also they're increasing regulatory scrutiny. Well, the regulations are by design. That way they can take them over if they need it. A lot of takeovers have already happened, but there's more to go. So with this, we've got also Ross stores. So they're a discount store, and they reported great earnings because people are basically moving down with their wallets. Another story, we've got SpaceX considering selling shares at $200 billion valuation. Again, it's a move to cash, a little bit more certainty. What are we watching? So geopolitical risk. We've got the leaders of South Korea, China, and Japan meeting for the first trilateral talks since 2019. So we've got a lot of things going over in the East that has been very quiet. Of course, watching China a bit. We've got basically war zones going on over Taiwan. There were more Chinese warplanes and Navy vessels off of the coast. So a lot of these things that happen or that they allow to happen into long weekends. And that's why I want to increase your awareness, if you would. We've got $8 trillion in bad debts. Toppled China's big four banks. Well, this is a little bit of an inflationary one-sided. However, the bad debt on these has brought down a great deal of their economy as far as making their exports and decisions as well. But their economy is much stronger than the United States at the moment. So I want to look a little bit more into what's going on. It's not necessarily directly related to the market. We've got Ukrainian pilots have completed F-16 training in the US. So an undisclosed number of pilots just finished this course over in Arizona, and now they're headed back to Europe to complete this training. So we've got Blinken is lobbying for strikes on Russia. They are preparing for war. They've got the pier going in for Gaza. They are bolstering troops on the borders. They have been airdropping troops on the borders inside Ukraine under the guise of NATO. So United States troops are already there. As we spoke about yesterday, they are basically putting in place the backbones for an automated draft. So anything you want to do about that now might be the time. It's going a little farther into the United States debt. We've got Janet Yellen is very concerned about this. The debt path is now seen entering a danger zone. It's been in a danger zone for a while. Now it's just entering a zone of no return, in my opinion, but that's the point. They want to inflate, and as they do, they're exporting all of this inflation to the world. So basically, the entire globe is paying anyone denominating dollars is paying down some of the United States debt. So we've got Fed's Bostic saying policy is taking longer to slow growth than he would like. Every time one of them comes out, they're managing the market and everybody's watching their words. Really has nothing to do with the real economy. So the market will very likely continue to inflate, but this is a good correction happening at the moment. So we've got European Central Bank, Schnabel, warning against lowering rates too quickly. So this is the flip side danger, and that is deflation. Severe deflation, of course, happens too rapidly, goes into a spiraling depression. So that could start basically what we call doom loops in some of these, as the companies that cannot afford anything anymore begin to lay off more people don't spend because they don't have money, and that just increases the issue. So I had one, this is unrelated. However, this is how they work in the background. So we had a Georgian Prime Minister, Irakli. Basically, he was saying that there was a death threat given to him, a prime minister. Now, who was this by, though? It was someone else in the EU. So basically, he was told that later that it was just misunderstood. But what they said, and there was an assassination attempt earlier by Fico. So this other person actually happened to survive the assassination attempt, and he's recovering very well. But the exact quote was, quote, "You see what happened to Fico, and you should be very careful," unquote. So tell me how that's misunderstood. He understands very clearly what was just told to him. If he doesn't play along, and that's how that all works. So with this, going on to a lighter subject, I haven't hit this in a while, but we've got violets today that I would like to encourage you to grow. They're not only edible, they do have healing properties and are good for you. They're also called Johnny Jump Ups, which I like that name, but they're very beautiful, very nice in salads. We'd use them to basically bring out the color. And then also they can be used in a tea, very beautiful tea. But these have medicinal uses. It says they can treat insomnia, headaches, better skin. They like the scent of these, of course, slight pain issue, although I wouldn't use it for that necessarily. And then relieving cold and sinus problems. They're also good cardiac support, actually, which is not listed here. Now, I've got a couple of books now. I'd just like to thank one of my viewers also for your contribution of giving me more. I truly appreciate that, and I'll be bringing more out on that as I get a little more time and I'm able to look at it. So with this, we are heading into the long weekend. I do want you to stay aware. I think we're going to possibly have market open green, but we've got to wait and see where that goes. So with this, caution this weekend. Just stay alert, and I will see you probably Monday morning for market open, market Tuesday. So until then, my friends, stay free.